What's up, guys? What's up, guys? It's yours truly, Joe Butler, aka the Credit King, and I'm coming to you live today. Buyer beware of high interest rates. Please, please, people. My name is Joe Butler, the Credit King, and I know that you may not know, but I help people all across this country improve their credit score, better their financial situation. But today, I want to talk about the importance of high interest rates. Buyers, please be aware. Beware. I'm sorry. Please beware. And this is something really, really close because the more and more I help more people, what I know. Hey, how you doing, Cassandra? The more I know and the more I see people getting stuck with these high, ridiculous interest rates. We've all been there, okay? We go to that car dealer for whatever reason. Our car broke down. We need a new car. For whatever reason, we need a car and we need it fast, even though we may have poor credit. So we go to the dealer and we try to find an affordable car, something that we think we can pay for, something maybe about $10,000. And at that point, we go and we talk to the salesperson and they say, okay, how's your credit? And you say not that good, or they say, okay, well, we're going to go check your credit to see what we can have. So they run and check your credit. They come back and they tell you it's a couple people that can, get you cars. We can get you into cars. And typically we're so excited about being able to get into that vehicle, we never ask the most important question of all. And that most important question is, well, what is the interest rate of this vehicle going to be? Okay, what we typically are concerned with is just the amount of the payment. If the payment fits inside of our budget, even if they have to stretch this loan out to 72 months, we typically take the loan. Okay, but what's happening more and more and more, and I hate to call any particular companies out, but Santander, and I'm going to call them out, Santander, they deal with people with poor credit, and typically they give them excessively high interest rates. All right. And a lot of times we want that car so bad, we're not really recognizing the effect that these high interest rates are going to have on us. So really quick, I just wanted to discuss about what these interest rates really mean, how they actually affect you. Now, remember, we were going to purchase a car for $10,000. All right. So typically, if you have poor credit, they're going to want you to put a down payment, $1,000 or $1,000 to $1,500 down on this $10,000 vehicle because of your poor credit. So, just say for an example, we put down $2,000 on this $10,000 vehicle. So our mindset is we only have $8,000 of this car to finance. But once you add tax, tag, title, and all the other add-ins, say the loan is back up to $10,000, which is still fine. But now the bad part is when they come and hit you with 25% interest. Okay, 25% interest. Everyone, please take the time out and Google a car interest calculator, and then you will see the true effects of what this may have. Just to break it out real briefly, and without going a lot of crazy excessive math, if you think about this, the first year, this car of $10,000 that you're borrowing, all right, 25% of that is going to be an interest. So you could say $2,500 is what you're going to pay in interest on that vehicle in the first year. Now, mind you, this is only a $10,000 vehicle. So typically, your payments are going to be somewhere right around $300 a month. Okay, so now you're paying $300 a month for a year. You've effectively paid $3,000, but when you look at your loan amount, you still owe $9,500. And then this repeats again and again and again because the amortization rate of that loan, the next year, you're looking at being the interest, 25% interest on $9,500. Effectively, when you pay off this loan of $10,000, you're going to pay close to $19,000 in payments. $19,000 in payments for this $10,000 vehicle, and that's not counting the $2,000 that you put down. Okay, so you have to beware, people. And if you miss one payment, or if you're late one payment and they put one to the back, they start adding fees. And I know a lot of people really don't want to hear this, because if you need a car, they feel that they need a car. If you have $2,000 to put down on a vehicle, if they're going to give you anything above, if they're going to give you 17% interest and up, you're better off just buying a cash car. Okay? Buy the cash car, improve your credit, and at that point you can go get you a vehicle for 0 down at an affordable interest rate, maybe 5%, 4%, or 3%. I just bought a vehicle. 4% interest is what it was on. For the total length of the vehicle was $26,000. The total interest that I'll pay on that is $2,400, and that's over a 6-year period. So $2,400 over 6 years is nothing. But when you're paying $2,500 a year on a $10,000 loan, you will remain to be upside down in that vehicle. And always make sure you get that gap insurance, especially if you have a high interest rate, because right off the back, you're going to be upside down in that loan. So if you get in an accident, your insurance is not going to cover it all. Okay, so be sure you get that gap coverage, and be sure, if you got to pay over 17%, if you got to pay over 15%, I would honestly get a cash car and wait it out at least for 3 to 6 months until you get your credit in a better situation. That way you can save more of your money, because just think, on a $10,000 car, now let's do the math for another way. Say on that same $10,000 vehicle, you had good credit, okay? So at that point, you would have actually acquired for a 0 down loan. All right, and say they still gave you the same $2,000 in, you know, tax, tag, and title. So now you're financing $12,000. Okay, but if you have a 5% interest rate on that $12,000, let me do this quick math real quick. 5%, 10%, 1,200, $600 a month. I mean, $600 in a year is what it's going to cost you if you got a 5% interest rate on a $12,000 loan. Just $600 a year. Do you see the difference? Okay, 25% interest, you're going to be paying $2,500 every year. 5% interest, you'll be paying $600 every year. That means so much more of that $3,000 that you paid is going to go to the principal and not just to paying interest. So please beware of these high interest rates. The car salesman is not necessarily your friend. Do not let them continue to run your credit again and again, and they're going to tell you, you know, it doesn't matter. We'll run it 10 times, but it won't really affect your credit score. Well, when you have 20 inquiries, it's definitely going to affect your credit score. So beware of those high interest rates. Beware of those subprime lenders that's willing to give you money even though you have a 520 credit score. I know you need that vehicle, but it's way better and more financially feasible if you're doing that to just buy a cash car, fix your credit, and then get something that you actually love and deserve. This is your boy Credit King, and if you're making sure you watch this, make sure you hit hashtag replay right below. And for all you people out there, if you know somebody in one of these car situations and they're trying to get out of these high interest rates, they're going to tell you that you can refinance, please like, comment, and share this to someone that you know with less than perfect credit that's looking to purchase a car, so they won't be a victim to these high interest rates. All these buy here, pay here, drive time, a lot of these places, you will be victim to these high interest rates. Don't do it. Don't do it. It's yours truly, the Credit King. Y'all have a blessed day. And if you have any questions or information, please leave a comment below, and I'll surely love to answer that question. Thank you, and you have a wonderful evening.